What's going on, everybody? It's your boy C-Zar, and we are talking about XCN today, OnyxCoin. Hit that like button, you guys. Subscribe if you want to see more content like this, and let's get into it, okay? I want to try and keep this brief, stay on topic, buckle up, get ready, okay? It's going to be a lot. We're looking at this thing on a daily basis on the ribbon, okay? What I like about the ribbon is that we've consolidated in it, right? Generally speaking, that means that you have to go below the ribbon, which we did, before you can actually continue on and go upwards. Not always, but generally that's what it means. We did do that. We found support. We're moving up, but we did something that's a little bit of a no-no, right? You came up and you rejected your yellow line here. And if you don't think that's a rejection, let me just say, from that high to the low that we have today, that's over a 15% move down, okay? In less than 24 hours time. I would consider that a rejection, okay? Personally. So what we need to do now, we're in a very precarious situation. We need to reject the rejection. We need to not see a day close below that red line there, which the red line right now is at about 1.82 cents. We need to not see a daily close below 1.82 cents. We can go below there. We can wick below there. A 4-hour candle can close below there, but a daily candle cannot. If we do that, this confirms this rejection here and also confirms that we'd be going down to our next target area, which would be anywhere from 1.5 cents, even down to 1 cent, 1.2 cents, 1.3 cents, anything and everything in between is game, but certainly dramatically lower than we are now from a percentage standpoint, right? To invalidate the rejection, to validate the pump, we need to get above the yellow line, right? So while we're in this range, it doesn't really help us one way or another, right? We're just waiting, but closing above the yellow line, closing below the red line. We're not looking for wicks, right? If we moved up there now, if we were up there right now, I'd still be worried that we don't close up here. You need to close above the yellow line if you want this thing to not go lower. If you want it to go lower, close below the red line. Let's see if we can establish an estimate as to what we're going to do here. Looking at the daily RSI, I actually found something very interesting about this, right? If we're looking at this line where you found support at time and time again, all the way back throughout this thing's relative history, every time that you've come down here to find support, just notice how you move straight down. A little bit of consolidation down here where you pivot a little bit, but basically straight down. Straight down here you find support. Straight down, one pivot, and then down, right? Straight down, essentially one pivot and then down. You consolidate a little bit, but then down, right? Here, it wasn't straight down. It was a little bit down, a little bit down, a little bit down, a little bit down. You've been very methodical on this last move, and it's a bit different than these other ones. Not just in size, not just the fact that you have bearish divergence to top you off, but it's a bit different in the sense that you're a little bit more methodical. It's not so sporadic to the downside. Different behavior could beget different results. We might not find support here. Just something I thought I'd offer. As of now, we are finding support here. Things look good. It's definitely nice, but it is completely possible, and it's actually very common when you go to the overbought zone and then you go below the 50 to see the oversold zone before you ever get to the overbought zone again. And we haven't seen the oversold zone yet. In fact, we've gotten overbought, gone below the 50, gotten overbought again, gone below the 50, hit the overbought zone. I don't know if that counts as getting into it. Gone below the 50, overbought, gone below the 50, overbought. We've done it so many times. It's completely possible we could do it again, but the more and more that we do this, the less likely it gets each time. I'm under the impression that we could go to the oversold zone. If we do on the daily go to the oversold zone, we would get that close below the red line, below 1.82 cents on a daily basis, and we would go to this area here. Now, I'm saying that I assume we could, does not mean that we are going to. It's possible that we could, but doesn't mean that we're going to. Looking at the 4-hour RSI here, I had hopes. It looked good. Again, different behavior begets different results. Straight up move, straight down move, straight up move, straight down move. Here, not so straight up. We're meandering a little bit. It's different. But so far, rejected off of the same exact area. So a little bit disappointing there. What we need to do here, again, is essentially hold the line. We do not want to go below 1.82 cents. Very bearish engulfing candle that we had, that we just closed actually 8 minutes ago. I wasn't even aware that it was that close. Maybe we could have watched that more. The encouraging thing about this bearish engulfing candle is we have higher lows. We have no volume coming in on that candle at all. That's a pretty immaculate candle for the amount of volume. I mean, from an open to closing basis, guys, that's about the same size as this one was from an open to closing basis, literally. But look at the difference in volume that you saw, right? Upside, good. Downside, it's like you don't even want to do it. But something to be aware of still, right? We're still holding formation. It's still good. But if we start to break formation, especially if we get below 1.82 cents on a daily closing basis, on a multi-4-hour closing basis, I'd start to be worried that we go down. As of now, looking at the 4-hour, it's not completely condemning. It's not completely condemning, right? Finding resistance here is not necessarily ideal, but you could still find support at the 40 and come back up. You could find support right here and come back up. There's nothing that says that you have to go lower right now, okay? Getting below the 40 on the RSI, on the 4-hour RSI, would be discouraging, in my opinion, okay? Getting below 1.82 cents would be discouraging, in my opinion. I think we're about to move up, though. That's what it looks like, actually. 1-hour time frame. This one might be the saving grace. You've broken out of your downtrend recently. You're consolidating now. You've got a little taste of the overbought zone. You're getting lower lows. Hell yeah, you are. Lower lows in the 1-hour time frame on the RSI, but getting higher lows here in the price. That's a good thing, guys. That's hidden bullish divergence, and you'd like to see that in a trend. Anytime that you're moving up, that's great. That's great. I definitely expect that you find support here and that you move up. If I'm wrong, lower we go. Okay, and just because you find support here does not mean that we are absolved of going lower. Maybe we come up, we find resistance right at this same area, and then inevitably go down. Again, it's very key, guys, that we close above, was it 2.15 or 2.2 cents? What was it? It was 2.16. Let's just say 2.2 to be safe. It's very key that we close above 2.2 cents on a daily aspect and that we do not close below 1.82 on a daily aspect, okay? 15-minute time frame, what's that doing? Let's look at that. What you look like you want to do here. Overbought time and time again, not getting oversold. Love it. Good. Cool. Yeah, looking good to me, man. Looking good. Moving down without volume, moving up with volume. Yeah, you look good. Hopefully this is just a little bit of a scare tactic to shake some people out. I think that we will move up. You know, it's kind of funny how this happens on the first 4-hour candle of the day. There's some other indicators I want to show you guys before we're done with this video, okay? I do think we're moving up here. Just validate me. Validate me. Please do not invalidate me. Again, please don't do it, please. If you do, whatever, actually. I'm not actually going to be too sad. If we get invalidated, I'm just going to buy more at cheaper prices. So ultimately, sad short term, but it's going to make the bank bigger at the end of the day, right? Like if we just move up now, I'm going to have a good time. You're going to have a good time. We're all making money. But if it moves down and then it moves up, we're just making more money if we bought at lower prices, right? That's actually not a bad thing. If you look at it that way, downside price action is rather encourageable, I should say. We want to look at other indicators. Yes, we want to look at this one here. So I'm going to delete this. I should just change that. Delete that one there. Looking at the daily time frame, get rid of the RSI too. Daily time frame, MFI. This is the money flow index. If you guys know what it is, if you don't know what it is, it's similar to the RSI, but a little bit different, right? But treat it similar to the RSI, okay? You can get overbought, you can get oversold. You can see where it looks very similar to that, right? But it's the MFI. I made it green to show you that it's the money flow, right? Bouncing off the 50, higher lows. That's good to see, right? Moving up here, not on a 3-day time frame, man. I want to be on a daily time frame. I didn't know it was on a 3-day time frame. Okay, this is better. There we go. Still moving up, still got higher lows, but a more pronounced uptrend here, right? Higher lows, higher highs in this channel. It seems as though you want to move up from here. Moving up in the MFI does not necessarily equate to moving up in price. You can move up here, right? Like here you're moving up in the MFI and you actually sold off in price. I mean, you did move as you sold off, that's when the MFI started to move down. I'm just saying that moving up does not equate to a move like this every single time, right? But being down here, I definitely would assume that you are in a good position to bounce, not in the position to break down, right? If you do, I mean, breaking out of this uptrend is a possibility as well, but that something like that, if that were to happen, again, we would likely go down to this significantly lower area at around 1.5 cents or lower. So hopefully we don't see that. Hopefully we do continue to move up from here. The stochastic RSI, not the stochastic RSI, just the stochastic, it is postured in a way that could be really good or could promote more growth to the downside. If today can close green, this blue line here, how it's pivoted, it's hooked to the downside right now. If the day closes green, it's not going to be hooked anymore. It's going to be to the upside. The red line too has a chance of getting out of the oversold zone. Generally, not always, right? Just like here, you got both of them out of the oversold zone, and then you came back in still. But generally, when you get both out of the oversold zone, that means that you're going all the way up to the overbought zone, and something like that would be good for a breakout move of this range here. So hopefully we can see that as well. Hopefully this by this indicator, the stochastic, what that means is we want today to close green. If it doesn't close green, at least you're down 6.7% right now. At least close like very neutral, more neutral. Close at 2 cents or higher. That's what we want. Really though, we want to close above 2.2 cents, right? The MACD is something that I got really excited about. So here on the MACD, your oscillator on the daily time frame, you're near the zero. You're right at the zero line right here, okay? Finding support here is very, very common. on the oscillators, right? You find support on the oscillators, meaning that the price goes up. If the blue line is below the orange line, your faster moving average is below your slower moving average. That means you're in a downward sloping kind of position. You are likely building bearish momentum. If your blue line gets above the red line, you're building bullish momentum, right? These histograms, how they grow by the rate of separation, of divergence, right? So whenever you see this histogram on the green side growing, you're seeing the blue line growing faster than the red line, and they're separating. Whenever this regresses, the blue line and the red line are coming closer together until eventually you get the cross. That's why the MACD on the red here is flipping red. And it builds red, it's shaded in red as that blue line is getting further away from the green. But as you get, blue line is getting further away from the orange. As you're getting closer to the orange, it's no longer shaded red. It's still red. It's still a red hint on the histogram here because the blue line's below. But only whenever you get the shaded, the darker red, that's whenever it's separating. You're gaining bearish momentum, okay? Here you have a divergence, a higher low in your momentum with a lower low in your price. That's bullish divergence. We've got some good stuff going on here. That does not mean that you have to move all the way up and retrace and blow up right now through the roof, but it certainly means that we are getting set up for some kind of bullish reversal. You could go lower still and still have this bullish reversal at play, okay? All that to say, guys, I think it'd be very encouraging to see today close green. I think it'd be very encouraging to see prices above 2.2 cents, and it would be extremely discouraging to see prices that are lower than this. And it's, I shouldn't even say extremely discouraging. I know it'd be extremely discouraging for some people, but really it would just be more of it would only be discouraging because we're expecting it to move up now. We want it to move up now. We've been waiting. We've been so patient, right? And it just hasn't moved up yet. It'd be a little discouraging in that note, but in a matter of no time at all, it would come back, we would recover, we would see higher prices, stuff like that. So hopefully that doesn't happen. Hopefully we do close at 2.2 cents and we can just avoid going lower at all. But if we do go lower, it's nothing to worry about. It's just a better buying opportunity, right? That's all I'm trying to say. There's one more indicator I want to pull up before we end the video, and this is an indicator that I wanted to actually bring up in the beginning of the video, but for whatever reason I decided to bring it up at the end. It's a new indicator. It's called the LRO, linear regression oscillator chart prime. That's the indicator it is right here, right? And I'm going to delete the RSI so we have less noise on the chart. Okay, it's already pretty noisy, but what I like about this indicator, you guys, and I just want to say first and foremost, okay, put the big face on there. I don't really, I do mess around with other indicators than what I just talk about on the channel, right? Obviously, I know how to use the MACD, the stochastics, the money flow, accumulation distribution, Elders Force Index. Like there's all kinds of indicators that you can use, Bollinger Bands, right? I don't apply it because I think that it's overwhelming. I think that really to keep it simple, especially when talking about things, using one indicator is fine. But in my own analysis, not all the time, but often enough, I do use more indicators than what I talk about or what I show in the videos here, right? And sometimes I like to explore. I like to find other indicators. Most of the time, it's crap. It's like going through crypto. You go through 99 out of 100, and you find you're like, why do people even make this indicator? Does this actually work? Did this guy make money? Did this lady make money? Whoever made the indicator? But sometimes you find an indicator that is valuable, or it's at least helpful. And I think that we have one here. I think anybody is allowed to use it. I don't know if you need TradingView Premium to have access to it, or if you're just on TradingView you have access. But if you go to indicators, you go to community, and you scroll down, let me see where it is. Where are you? Yeah, linear regression oscillator chart prime. It's got 8.9K, what is that? Boosts, whatever. Yeah, that one. Linear regression, if you click on community, it's a little bit lower. I think you do need the premium to have access to that, but I'm not 100% sure. And you click it. I haven't done anything to it. I haven't adjusted any parameters, and I think it's pretty damn cool. It's not flawless. You're not going to catch the exact low. You're not going to catch the exact high. Here you have it says reversion as if you're supposed to go down, and you technically did, but then you ripped. Here it says reversion right at the top, and you did dip, okay? I want to explain what it means real quick, just so that you can understand, because I know it's a little bit of a different context. Essentially, what you're seeing here is an illustration of what you see down here. It cooperates very well, and I love to see that. You can even do this thing where you can have the candles colored in the same fashion, so you know bullish, bearish trends, right? Stuff like that. It doesn't necessarily mean green or red, but it's bullish or bearish trends. Let me explain this thing real quick before we get more into it. Okay, so here you get these lines, these invalidation levels. If it's a green one, it'll always be on the low side. If it's a blue one, it'll always be on the upside, right? So green, these like lime green ones here, if you invalidate the price, that's a bearish thing, right? You're invalidating the uptrend. The blue ones are bullish because if you invalidate that, you're invalidating the downtrend, okay? And this thing establishes when the downtrends are and the uptrends are. Generally around these triangles, but not always, okay? The triangles, I believe, they're not reversion points. They're points at which the oscillator here on the linear regression oscillator flips back green. Or, hold on, I'm going to sneeze. I got that muted just in time, man. You guys still don't know how it sounds when I sneeze. It's rugged, man. It's real rugged. But I believe, again, this is a new indicator for me, but I believe whenever these, whenever they flip, whenever it flips, the oscillator flips blue or green, that's where these triangles come from, okay? The reversions, these little things that say reversions, they come from when the oscillators get into their quote-unquote overbought areas, okay? When they get into their overbought areas, and not just once they get to the overbought zone, but once they find a peak and they pull back, okay? That's where these little squares here, those are the reversions in the price, okay? You can see it. It's actually pretty damn flawless most of the time. Go back in time on a daily basis. You got your reversion here. You went down until you got your reversion here, and then you went up a little bit. And then now you've got this downtrend here, or you've got this downward triangle. That means your oscillator is slipping back bearish. You don't need a reversion to continue going lower. In fact, right, looking at this here, here's your reversion. That's suggesting a downtrend is starting, confirming the downtrend here, right? You confirmed it here, and that's why your invalidation level is right there. So to deconfirm the downtrend, you need to get above the invalidation level, right? So that's a key area to watch. These invalidation levels, they can remain constant. You could put a line there forever if you want, but you're going to continue. These invalidation levels will continue to build down as the price forms significant areas. And it makes sense. It just makes sense with the naked eye, but this takes the thinking out of it for you. If you're moving lower, what would help invalidate this down move? Well, moving back above prior areas of resistance. It makes sense. It's fairly straightforward. It's just pleasant to look at, right? And then, of course, these reversion signals tend to be good, right? That one, it came a little bit after the high, but hey, if you sold here, even if you sold at the low of the day, you did well. If you bought here, even if you bought like 2 or 3 days later, you still could have had an opportunity to sell at higher prices. Catch this, flip to the negative, sell if you were in a bad position or whatever, and just wait for that next reversion to come, which is all the way down at the bottom here. Literally at this low was the reversion, okay? Blue reversion here, bearish trend. It's just, you can see how pretty damn flawless it is most of the time. Here, that was a hiccup. It doesn't work. No indicator is 100% guaranteed to work. But look at this, right? You're in your downtrend. You're in your downtrend. You have your invalidation level here. You invalidated it, right? You invalidated the downtrend. You then invalidated your uptrend, and then you had another validation level here. So you're invalidating. It can be a little bit confusing, but once you finally picked the side and you stuck to it, you invalidated your downtrend here, and then you found support above that invalidation line. That actually should suggest that you are continuing in an uptrend, in which case you get your uptrend, very solid line here for your invalidation level. And that's not the same invalidation level now that we have over here, right? But just going all the way up here, you can see that we had a reversion right at the top, a really big reversion right at the top, perfectly timed. Not every time is it perfect, and not every time are the lows, or do the lows come with reversions themselves, right? You do not need, right here it came with a low, down here it came with a low, but this low did not come with a reversion, right? Not every single low and not every single high comes with a reversion. It's not something you should look at, but or count on every single time. But being that we haven't had a reversion yet, a bullish reversion, we only have the bearish reversion. We haven't had enough downside yet to see a bullish reversion. Maybe we do continue to go down. As of right now, this indicator is saying that we are in a downtrend. Let's get to the meat and potatoes of it, right? I hope I made enough sense out of it. I hope you guys understood to some degree how it all works. It really does. Basically, you could use just this, or you could use just the price. It's really cool because what it does is it literally incorporates all this. It puts it into the charts. And if you understand how this works, you can just look at the charts without even looking at the indicators. So that's what I think is kind of cool. It can be annoying, right? If you put it on a 4-hour, by the way, it works on any time frame, daily time frame, 4-hour time frame. You want to do short-term trades, it works. It's just there's a lot of noise on the charts. With other indicators or with drawings, it's kind of a pain in the ass. That's why I saved it for the end of the video here. Weekly time frames, right? You don't have a lot of history, so it's not going to work as well. But the daily time frame, the invalidation line, the invalidation area that we're looking for now, that's what I wanted to address. That's at about 3.1 cents, 3.113 cents. And that makes sense to me because that's our highest daily close right here since we've really been like moving down, since we got out of this initial consolidation phase here. So that makes sense as an invalidation. All that means is to invalidate this downtrend by means of this indicator, we need to see prices above 3.13 cents. And what's great about this is it's not a closing thing. It's just any price at all. So any price at all would invalidate the downtrend, which would then validate a potential uptrend, right? Hopefully. But as of right now, we are in a downtrend. Looking at the 4-hour time frame here, we do have some bullish consistencies going. Right now on the 4-hour, it suggests that to invalidate the uptrend, which we are currently in an uptrend right now, the invalidation would be down here at about 1.738 cents. I think we'd be suggested to go down if we close below 1.82 cents on a 4-hour basis personally. But 1-hour time frame reversion here, so we are in a downtrend as of now. We haven't moved lower yet. Still same invalidation line there. Right here at about 1.736, 1.738 cents, something like that. We could go lower. We absolutely could go lower, but as long as we're above this line, I think by means of this indicator, by means of other indicators, we still will be trending higher. I think bouncing from here would be nice to see. That way we can avoid going lower at all, maintain this higher low right now, but I think I'm just rambling at this point, guys. I think I've said everything that I need to say, right? I really wanted to just show this indicator because if there's anybody that wants to try trading, you have a very basic level of understanding with trading, but you at least have some good risk management metrics. This tool, I like it, man. I really do like it. I don't know how straightforward it seems to you guys or not, but it seems very straightforward to me, right? Like here, you're getting the signal that you're starting to flip bullish. Okay, cool. You can buy, and if you bought right here, it's never ideal to take losses, but hey, you could sell right here at the invalidation level and look at how much loss that saved you from buying, right? You're moving up here, getting excited you're going to move up. Okay, you can buy here, and then if it moves down, okay, you're invalidated, whatever. Now you get the reversion. This is a very key signal. Most of the time, these little diamonds, these reversions tend to matter more than the triangles do, right? Because the triangles are just the oscillator moving up and down. The reversion means the oscillator got oversold. So it's time to start thinking about buying. And it was a bigger move than any of these other moves. That's all I'm trying to say. And again, what I like about it is it seems to work very well, not just on the 1 hour, not just on the 4 hour, but any time frame I've chosen really. It's better, I think, for short-term trades than it is for long-term, but really anything. It's pretty damn accurate most of the time. I don't know. Linear regression oscillator chart prime is what it's called. XCN on a cliff, looking like it wants to go down. Maybe it goes up. Hopefully it goes up. I was more bullish at the beginning of this 4-hour candle, but now it kind of looks like it wants to go down. And after looking at this here, the invalidation level is all the way down here, sure. But we still, I guess we did invalidate the downtrend. I guess we're in an uptrend now, okay? Technically, we're in an uptrend until we break below 1.737 cents. But I think by means of our own analysis using other indicators, 1.82 cents is the real invalidation area, this low. We don't need to wait for this low here and watch you break this low and then you still rip, whatever. But I think I would start to get a little bit concerned if we went below 1.82 cents. That's all I'm saying. Not on a price perspective, but on a closing price perspective on a 4-hour time frame or greater. I hope I've said everything I need to say. I hope it all makes sense. If you guys like the video, hit the like button, subscribe if you want to see more content like that. Again, to add this indicator, if you want to add it yourself, you just click on community. You scroll down. I made it a star. It's below this lows, below Pandora, above Sharp, above Task, above Ichimoku theories, linear regression oscillator. This one right here, chart prime 8.9K. I don't know if it'll be the same for you whenever you check on it, but Yeah, right there. I put a star so that I don't lose it. It's in my favorites, right? All these other ones, not all of these are actually favorites. Don't worry about them. Some of them I just find funny, but I really don't use most of these at all. So don't look at this and assume that it's a list that's useful. This is an old list, man, from stuff that probably shouldn't even be on here. Like I don't even know what this is. What's the point of that? Moving average simple, yeah, okay, you need that. Moon phases for fun, whatever. Money flow, sure. Ease of movement, I don't really need that. Correlation coefficient, sure. Accumulation distribution sucks. At least I think it sucks. Stochastic RSI, whatever. Everything else probably fine. But anyways, guys, I'm going to end the video. Hit the like button, subscribe. I'll see you on the next one. Take care. Bye.